Let's do a fundamental analysis on Facebook stock. What is happening, investors? It is your boy Jack, and today we are taking a look at the very juicy Facebook. Facebook is a company that every single person is going to be aware of. It's one that more than likely quite a lot of you are invested in. It's one I initially bought at $200 a share, and you know, I can't seem to stop following them. As of late as well, with everything that's been going on in the market, I have been, looking into adding a little bit more money to these safer or more defensive investments, the biggest companies in the world that might not offer the most huge short-term returns, but I can sleep well at night with my money in them, Facebook being one. I just bought a little bit of Apple the other day and a little bit of Amazon the other day, adding to my already existing positions, and now I'm looking at Facebook. And I want to do the fundamentals. So this is actually something I want to do for myself as well, because again, I'm considering buying into the company, so I have to just get back up to date with everything that's been going on. So in today's video, we're going to be speaking about quite a few things, okay? The practical side of the Facebook, the user growth, has it been keeping up, all of that kind of stuff. We will have a look at the net income growth. We're going to be looking at the balance sheet, the debt to equity ratio, price to book ratio, the forward PE ratio, how they have been historically, free cash flow growth, return on invested capital. A lot of these juicy things that you really do have to look at, especially when it comes to these very well established companies such as Facebook, Apple, Amazon, that we have years and years of data to look back on. It can make you much more confident when you decide to pull the trigger and invest in any given company. Aside from that, we will have a look into some recent analyst upgrades, downgrades, iterations, all that kind of stuff. Right before we do get into it, my friends, can I please ask you to hit that like button? It really helps me out a lot. Drop me a comment down below. Let me know, are you a Facebook investor? And when did you buy? I bet we have some people in here who was buying like 5-10 years ago. And if you are indeed new around here, hit that juicy red subscribe button. I will more than likely make a video like this for all of the FANG stocks over the next couple of weeks. You take a look at Facebook, you look at the yearly chart, you see that it's still up 37%. It was up nearly 50% on the year. It was up over a $1 trillion market cap. Very close to 1.2 trillion, I do believe. I may be a little bit off with my numbers there. And right now it is literally just on the cusp of hitting 1 trillion again. So a huge company, not one you traditionally look towards when it comes to high growth returns. You also might just have a quick look at the PE ratio and see 26. That's very high. I'm going to wait till it crashes 30+%. When you look at its historical numbers, its historic valuations, things are a little bit different. Also, keep in mind, Facebook bought the likes of Instagram and they bought WhatsApp back in the day, something we used to speak about an awful lot on the channel. They have always been very good with investing their capital. They've always been good at even acquisitions for management teams, and it's treated them very well. And Facebook still being extraordinarily popular, most recent monthly active users was actually up 7.3% at 2.9 billion for the quarter ended in June. 2.9 billion monthly active users. I mean, that is absolutely insane, my friends. And keep in mind that, there's still a lot of untapped market out there. There's still a lot of potential customers. Nearly everybody is a potential customer for Facebook. And also keep in mind that more monthly active users is extraordinarily important, because that means more advertisers, etc., etc., which is where Facebook makes their money. So first thing I want to take a look at is the revenue growth, okay? Go all the way back to 2012. Look at that, 5 billion. Now we're up at over 104 billion. If we go back 5 years, okay, that growth has been absolutely immense. There is no doubt about it that Facebook's revenue growth is some of the absolute best that is out there, especially for a company of its size. Net income is a similar story. I mean, go all the way back here, which was 2013, 1.5 billion. Look, now we're up at nearly 40 billion. And it's slow, steady, slow not being the right word, but it's steady, consistent growth. Occasionally they're going to have their dips, but for the most part, wow, the growth is absolutely insane. So when you do take a look at that net income growth, you take a look at that revenue growth, you may understand why you're going to be willing to pay a little bit more for a company of this quality. Next thing I want to have a look at is debt to equity, something I always personally do like to look at. And in case you don't know what that is, or it's one of those phrases you hear thrown around a lot, the debt to equity ratio is used to evaluate a company's financial leverage and is calculated by dividing a company's total liabilities by its shareholder equity, okay? The DE ratio is an important metric used in corporate finance. It is a measure of the degree to which a company is financing its operations through debt versus wholly owned funds, okay? So obviously you want this number to be very, very low. Generally, anything under 2 is considered quite good. Under 1 is very, very good. Even under 5 is okay in a lot of larger companies. Facebook's debt to equity ratio is currently sitting at 0.23. It is absolutely fantastic, my friends. It is beautiful. Oftentimes when we look at a company, we look at the balance sheet, we look at the current assets, okay? Facebook's are at over 80 billion. If we just look at their total assets, 170 billion, their total liabilities are sitting at 32 billion. their cash, okay, never mind their entire shareholder equity, their cash would cover it at the snap of a fingers. This is not something you are going to see very often when you have a look at debt to equity, even for larger companies. Something like this is very much so filling me with confidence. I mean, think about it, guys. They have that much cash. They don't have to worry about it. If ever they need more debt, they can do so and still maintain an excellent debt to equity ratio. But they're not going to need to, because they already put themselves in such a fantastic position. And putting yourself in a position like this is what lets you buy companies like Instagram. It lets you buy companies like WhatsApp. It lets you acquire smaller companies just for the management team alone. And that's what Facebook has done for more than a decade at this stage. So the debt to equity ratio, absolutely beautiful. But a lot of the traditional valuation metrics aren't traditionally very good for Facebook. We're going to have a look at this one very quickly. Facebook price to book ratio. You will see currently it's at about 7.22, okay? Now, generally, okay, sub 1 or anywhere around 1 is considered okay. Anything below 1 is very good. That's when the likes of value investors will start looking at a company. But one thing I would like to point out for Facebook is, look, their PB ratio has generally been around that 6 mark. So it's a little bit higher than traditional, okay? But it's still not crazy. Yes, it's not industry standard, but it's true to what Facebook has had for the last, again, 5, 6 plus years. So I'm sure this particular metric would put a few people off, especially those value investors. For me personally, I still think this is a company who has a lot of room to grow, and I think most people do actually agree with me. Analysts in particular, which we will take a look at later on. And that's one thing about researching a company's fundamentals. You can't just Google what's a good price to book ratio. You can't just go off of what that says. It's different industry-wide. It's different the bigger you get. It's not as simple as just a quick Google search. Facebook's forward PE is currently sitting at about 22, which yet again, traditionally speaking, under normal market circumstances, is quite high. But again, Facebook's PE ratio has traditionally been much higher than that of an average company, okay? Going back to 2014, 2015, it wasn't uncommon to see 70, 80, okay? Right now, it's at 26.16, and it's been there for quite a long time. That's not going to change, and in my opinion, this is one of the companies that deserves to have a higher PE ratio because of the pure quality, because of how well intact they've kept their balance sheet for more than half a decade at this stage, because of the growth they have shown us they're capable of, because of the continuous monthly active users growth, even when it's already at 2.9 billion, because of the management team, etc., etc. You are going to pay premiums for premium companies. So when I'm looking at PE ratios, when I'm looking at forward PE ratios for a company such as this one, I'm not necessarily trying to compare it to industry standard, because this is not a standard company. It's one of the biggest companies in the entire world. I am, however, trying to compare it to what itself it has historically been. So for me, that PE ratio, I think that they're going to maintain that. And I actually think the PE ratio is going to be higher in the next 1, 2, 3 years time, which again might surprise some people, but I do think it will be. Now, we spoke a little bit about their net income, what that's doing from. Let's take a quick look at the cash flow and their return on invested capital. So just to reiterate, you know, that net income from 2015, 3.6 billion all the way up to 38 billion today. Cash from operations, again, look at that steady, consistent growth, relatively fast as well. Not relatively fast, very fast. If you actually look at the repurchase of common stock, this is one thing I want to speak about as well. They have been buying back stock. Now, this is always something that investors should be happy to see. It makes the share pool a little bit smaller. It makes your shares worth a little bit more immediately, even though nothing else has changed. This is something that Apple, for example, is extraordinarily well known for their share buyback programs, and there's a lot of other ones out there. Facebook has started doing it a little bit more aggressively over the last few years. It's nothing crazy in all honesty, but it's better than seeing them continually issuing new shares and diluting the share pool, making our shares worth a little bit less. And there should be absolutely no reason that this has to change because of the reason we've already spoke about in this video. The amount of cash they have on hand, the debt to equity ratio, etc., etc. They don't need to raise capital via a share funding. And again, if we look at their free cash flow per share, you can see yet again just very, very steady growth at all-time highs, as it is literally every single year. Beautiful, exactly what you want to see yet again. Now, what is the general analyst consensus here? Okay, as of right now, we have 32 buys, 1 strong buy, 5 holds, and 1 sell. The average price target shows an upside of 15.15%. For a company such as Facebook, who is as big as it is right now, that is huge upside potential. In normal market conditions, you would not expect that sort of return, okay? But Facebook has done it year over year over year. And you can see here, analysts have always been very bullish on Facebook. Nothing really has changed. And just in September alone, okay, we see one downgrade here from buy to neutral. The price target is still at $400, okay? HSBC boosted price target, okay, to $300. They still think it's going to go down. Goldman Sachs initiated coverage, a $455 price target. Okay, Jefferies Financial Group there, $440 price target. It boosted it. So it's quite clear to see that the general consensus over on Wall Street and in between analysts, etc., is that there is going to be growth. Now, Facebook has always faced its challenges. They are right now. There's some things going on with Apple and the App Store. There's some news coming out for them today. There's always going to be things like that happening. The thing is, there has been for the last 10 years as well. That's why looking at the fundamentals for a company like this is so important. There's going to be fluctuations, okay? If we just look at Facebook stock here, you can see them. Here is a quick 8% move. It was followed by a quick more than 7% downward move. From the recent highs this month, where are we right about here? Facebook, I can't click the button. Facebook is down more than 10%. So although it has a $1 trillion market cap, it's a very well-established company. It's a very popular company. It still sees its volatility. So just be okay with that. For me, Facebook's one where I don't expect it to make me 300% in the next 5 years, but I do expect consistent returns, as they have had consistent returns in their revenue growth, their net income growth, their debt to equity has always been fantastic. They're always acquiring new companies, etc., etc. Valuations look surprisingly good. So guys, that is my video on Facebook as of right now. If you are interested in seeing a video like this for the likes of Apple, Amazon, Microsoft, all those guys, let me know in the comment section, because I will be more than happy to do them and go through similar metrics for all of those companies. As always, if you are thinking about investing in a company like Facebook, do of course keep up to date with the actual news as well, but that is what will cause the short-term price fluctuations. The fundamentals are what we can use to help us determine what will happen in the longer term. Anyway, guys, if you watched all the way to the end, you, my friend, are a true legend. I really do appreciate you being here. Thanks so much for your support. If you enjoyed the video, please hit that like button, drop me that comment down below, and subscribe if you're new around here. All of that helps me out absolutely hugely. I hope you all have a beautiful, blessed day. I'll see you in another video very soon. Peace.